consolidating right at that 30 to 31,000 level before breaking lower. So it makes sense that it's going to be hard to push back through that level. And in fact, it's given us a couple good shorting opportunities on Bitcoin throughout the pullbacks off of that level. Now, if we take a look at what's currently going on, you've now established price over the last week between 31,000 and 30,000. The reason that's important is because, number one, as long as it stays in that range, it has a positive bias to the upside.
Gareth Soloway, the chief market strategist and CFO of In the Money Stocks, recently made a statement suggesting that interest rates might rise due to strong consumer confidence and housing data. He mentioned that Jerome Powell may have to continue hiking rates. In June, consumer confidence reached its highest level in almost 1.5 years, indicating positive labor market sentiment. Additionally, business spending remained steady in May, indicating a stable economy despite recession concerns. Reports also indicated a likely revival in the housing market, with home sales reaching a 15-month high in May and monthly house prices increasing in April. However, this optimistic data implies that the Federal Reserve will probably need to raise interest rates further to manage demand in the overall economy. The U.S. Central Bank, which has already increased its policy rate by 500 basis points since March 2022, signaled the possibility of 2 more rate hikes this year. Gareth Soloway also shared insights on the trajectory of Bitcoin, stating that if it fails to maintain its current prices, a downtrend and decline could be expected. Conversely, if it reverses its position, an uptrend from its current level could occur. He also provided insights on gold and what to anticipate based on new employment and other data.
Look at the Bitcoin chart. We're going to talk a little bit about the technicals, the dominance, everything that's going on here. What are the probabilities that we're going to break out versus what are the probabilities that we're going to collapse back down? So let's take a look right off the bat at the technicals and chart of Bitcoin. So what we've seen is Bitcoin rallied all the way up, retesting this double top. All right. So this is the double top high pivot from the 14th of April. We retested it on the 23rd of June here. Now, if I zoom out, the reason that trend line has been so impressive in terms of its resistance is because it goes all the way back to this area here. So if you're looking at the 2021 cycle, this was a low pivot before the big move up. It came down, it hammered on it multiple times. It then went up again, coming down again, and then eventually falling, consolidating right at that 30 to 31,000 level before breaking lower. So it makes sense that it's going to be hard to push back through that level. And in fact, it's given us a couple good shorting opportunities on Bitcoin throughout the pullbacks off of that level. Now, if we take a look at what's currently going on, you've now established price over the last week between 31,000 and 30,000. The reason that's important is because, number one, as long as it stays in that range, it has a positive bias to the upside. So again, a positive bias to the upside as long as you stay sideways above 30,000. If it breaks 31,000 and confirms, you want to see it stay above that level for about 5 trading days. Then you can say, okay, we're headed higher. We're most likely headed to our next target. Where's the next target to the upside? There'll be a little resistance at this pivot low area right here and this one right here. That's at 34,500, give or take 35,000. And then this one upsloping would be my next target at around 44,800. We'll call it 45,000. Now, that's the bull case. If 30,000 does not hold, if we have a daily close below 30,000, psychologically, that's going to do a lot of damage to the charts. And you may see a drop to 28. If 28 breaks, 26 is your next stop here. If 26 breaks, then you could be talking about heading all the way back to 20,000 or the lows of 15,700. So basically summarizing here on the Bitcoin chart, the key is it needs to stay above 30,000 on a daily closing basis. Now, remember, that's a daily closing basis. So again, intraday, if it pierces, that doesn't matter. It can be rescued. Daily closing basis above 30,000, the bias is bullish right now near term. I'm only talking near term here. We'll have to see where it goes from there on out. But let's see. If it closes below 30,000, watch out below. You may see a big sell-off. Lastly, folks, I want to show the Bitcoin dominance chart. And again, BTC.D is the Bitcoin dominance chart. And what we could see clearly here, this was resistance all the way along here, hammering on that 49% level. Once it broke out, you can see the move. Now it's at 52%. Where is Bitcoin dominance going to go? You're talking about 57 to 60% dominance. Now, again, the key on this is understanding that it doesn't necessarily guarantee Bitcoin is going to go up. It might tell us that Bitcoin is going to come down a little bit, but altcoins are going to fall much, much more, which in all fairness is part of why Bitcoin dominance has gained. We've seen altcoins collapsing while Bitcoin has stayed relatively strong. So again, that's a key there on the Bitcoin dominance chart. I just want you guys fully aware of everything going on with Bitcoin, the technicals of the chart.
The shares of several prominent U.S. chip makers, including NVIDIA, experienced a significant decline in pre-market trading on Wednesday. This drop followed a report from the Wall Street Journal stating that the Biden administration plans to impose new restrictions on the export of AI chips to China. The proposed restrictions are driven by concerns that China or other adversarial nations could exploit the technology for developing advanced weapons or cyber threats. In the video, Soloway shares his perspective on the latest data reports for various commodities, taking into account the impact of this news. He specifically discusses the trajectory of gold and provides insights on its future outlook.
Jobless claims numbers came out at 226,000. That was actually a much lower number than expected. Now, in terms of jobless claims, to understand it completely, jobless claims are how many people are filing for unemployment. So the lower the number, the stronger the general economy would be assumed to be. After 3 prior weeks at above 260,000, to drop to 226 is showing relative strength in the economy. You combine that with a revised GDP number that was 2%, much better than expected. You have a recipe here for a Federal Reserve that is going to be hiking next meeting, which is in late July, and likely will be at least hiking one more time the remainder of the year. Now, if we take a look at the charts, I want to show you the gold chart here, guys. This is a big one. So look at the gold chart and look at what initially happened. In fact, let's flip over to the 10-minute chart. After that economic data, we saw a flush here on gold and then a full reversal. When you see this in the charts and you get a full reversal, that is very, very bullish. It means that big money was scooping up the panic sellers here and they were driving it up. Now, notice how you're consolidating. That's what we would refer to as bullish consolidation. So if we go to the gold daily chart, we can also see that there was a pivot high here connected to this point, and this was the target that I gave. I said, you have to retrace to the scene of the crime. The scene of the crime here, we have a pivot high, breakout, return to the scene of the crime would be returning to that same trend line, and that's where you look for buyers to come in. What happens today, folks? Buyers come in. This, to me, if you ask me, I'm going to go out on a limb and say this is probably the near-term low on gold. The next move will be up and retesting that triple top high, and I do think by year end, and here's your triple top high, guys. Look at that. 1, 2, and 3. By the end of this year, we will be above this line, maybe even significantly. I think this is, again, the beginning of the next bull move in gold. So that's your gold analysis. Really interesting price action today. I do hope you all have a wonderful rest of your day. And I, of course, will talk to you soon.
Chinese authorities recently banned the use of products made by U.S. chip maker Micron and halted infrastructure projects, citing serious cybersecurity risks. This move was seen as a response to the export restrictions imposed by the Biden administration and drew criticism from the U.S. Commerce Department. Technology and semiconductor issues have become central in the ongoing tensions between the U.S. and China, with efforts to limit China's access to advanced Western chips. HSBC Asset Management predicts a recession in the U.S. during the fourth quarter of this year, with a continued economic struggle in 2024. The Eurozone is also expected to experience an economic contraction in the following year. However, a potential silver lining is the projected decrease in inflation, leading HSBC to anticipate a cut in interest rates by the Federal Reserve by year-end. Despite these predictions, recent economic data from the U.S. suggests a resilient economy that may challenge the anticipated recession. Experts' opinions differ, and the future remains uncertain. Share your thoughts on whether a recession is imminent in the comments section below. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.